Let's get in Amnish Aggarwal, who's the head of research at Prabhudas Lilladher, joining in for a few ideas on investment and his thoughts as well. Amnish, thank you for joining in. Everyone's talking about the big cement space, the cement deal that has taken place. Your thoughts? Anything that you like out here in particular?
Cement, the prospects look to be quite encouraging because if the of the government remains on the infrastructure development, as it seems from the statements which have come so far, I think cement stocks should do well because the demand should grow by 7 to 8%, and the industry is undertaking a lot of consolidation. We have seen now yesterday Ambuja acquiring Penna, then Keshoram was there earlier. So I think the consolidation in the industry should continue. Particularly the big players, whether it is an Ultratech, Ambuja, etc., I think the efficiencies and scale should also come in. So I think cement overall, if you look particularly Ultratech, I think the stock has run up quite a bit. But if you look, say, in the medium to long term, there is still a lot of money to be made in the cement stocks. Near term, you can say fluctuations or variations can be there. But looking at the overall India growth story, cement looks to be a very interesting space to us.
So, Amnish, I'm morning. What are your top picks? And just contrast the two, big sort of the big players for us between an Ultratech versus, say, an Ambuja ACC. If an investor wants to take a pan-India sort of play exposure, then what stock would still get your top billing?
Hi. You see, the main thing is Ultratech is an established pan-India player. And if you look at, say, your EBITDA per ton, etc., the parameters today are superior for Ultratech. But at the same time, Ambuja is also aiming to improve the parameters, improve the efficiencies, go more for the, you can say, green energy and increase EBITDA per ton over a period of time. In terms of valuation, I think there is very little to divide between the two companies. So purely because Ambuja, your Ultratech has seen a big run up in the last, I would say, 10-15 days. So as of now, I think it's very difficult to choose between the two. But if you look at the broader parameters as of now in terms of profitability, margins and other things, Ultratech seems to be slightly better placed than Ambuja.
Right. Let's talk about the consumer space. You track that closely as well. A lot of people believe that maybe there could be accelerated spending towards consumption, increasing consumption and improving rural economy in the budget. But that thought is now slowly diminishing with hopes of continued policy making and investment in infra as well. Boosts to consumption will be more targeted in nature. Despite all of this, what is your thesis on consumer staples currently?
Okay, you see two things. First, if you look at the entire thesis of government increasing focus on consumption, I think it comes from two factors. First of all, the government has received much more dividend from RBI this year, so there is no dearth of money. Secondly, the way I would say the recent elections have gone, the way there has been stress in rural areas, so there is likelihood that there will be some more focus on the rural areas, some more focus on the bottom end of the pyramid in both rural and urban India. The third factor is that we are going to have normal monsoons this year. So all these 2-3 factors, they point out to improvement in the overall volume growth for the consumer sector. And if you look at the commentary of most of the companies from the past few months, I think there has been a gradual pickup in that. So looking at that, the growth rates this year should be better. And as we go along and as the monsoon progressive, I think the sentiments there should improve. But having said that, today the most of staple companies in particular, they are not, first of all, they are cheap. Secondly, they are sitting at margins which are near lifetime high because the raw materials were quite benign. So one will have to say cherry pick stocks over there. One just can't, you can say blindly say that I want to invest in consumer staple and I will end up making money.
Well, Amnish, I wanted to ask you about emphasis. There's a bit of a rejig that's taking place out there because there was a large trade that took place and that's why the free float has increased. Because of that, the weightage in the FTSE as well as in the MSCI have gone up, and yesterday we saw part of that taking place. So the stock ended at the high point of the day. Your view on this name or any other mid-cap IT name that you like?
You see, I don't have a firm view on emphasis, but in the mid-cap IT space, I think your engineering design service companies are the, I would say, segment we have been liking. I think the names there, for example, your LTTS is there, Scient is there. Okay, even names like Goforce, they look very interesting to us.
Correct. What about Senco Gold? Yesterday there was a large trade that took place, and Nimesh tells us that that was a clean out trade. The stock as is has done very, very well. Any view on this name, or do you prefer the larger names in the space?
The jewelry market as such, it is in a flux as of now because the gold prices have gone up.
Yeah, go ahead.
Yes. You see, gold prices have gone up. That is one. Secondly, the demand has been, I would say, slightly sluggish, and the next few months are also likely to be like you can say sluggish only. Now, having said that, I think as we stand today, I think one would be very cautious entering into the jewelry stocks for the next few months at least. However, on the lower levels, I think the frontline names like you can say Titan can look interesting, but definitely the competition in the industry is increasing. There is margin uncertainty. And even in case of say Senco, I think the throughput of many of the franchises which they are operating, that also needs to improve. But
Right.
the industry has been more like that. There is one valuation of Titan, and then you can say all the stocks are on a different plane. And today, because the balance sheets are better, the investors are ready to look at other names. So from that angle, I think all these names look interesting. But one needs to go into more detail as to what is happening in the industry at this point of time.
All right, final question before we let you go, Amnish. Then your thoughts on the life insurance space. Yesterday, the regulation that came in from the IRDAI put a finality to the surrender value issue. Do you think all of that is done and dusted and now the street is looking ahead? Or do you think that could still impact on their margins going forward?
You see, as of now, you can say the impact is done. But however, if you look at say in the longer term, all these industries are evolving industries. Today, as of now, I think there is now no hangover which is left. But in the long term, as these industries are evolving, they are the growing industries. I think more regulations can come, things can change. But I think from now on, I think some of these stocks have been consolidating from quite a long time, and there could be some uptick in them.
Okay, all right. Amnish, good to have you with us on the show this morning. Thanks very much for joining in. We'll, of course, look forward to more conversations. You have a good day.